Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, 𝗘𝗀𝗓𝗏, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, 𝗘𝗀𝗓𝗏.
Welcome in, 𝗘𝗀𝗓𝗏 here with Real Estate Radio Live. Thank you again for those that continue to follow the show and listen to our show. I appreciate that very much. Again, I apologize for being inconsistent with these podcasts. I'm trying to get better, trying to do at least once a week to keep those posted. And I do have some upcoming guests that I'll be announcing in the next couple of weeks. I'm excited about as we kind of wrap up the last part of 2021. Hard to believe that is true. Before we get started, just a reminder, this show is brought to you by Bundle Select. Bundle Select partners with corporations all over the United States. Matter of fact, over 500 to almost 600 companies and over 13 million employees now on the platform of Bundle Select. Go and find out why companies are partnering with Bundle Select to offer their employees discounts on real estate and lending and relocation. No different than medical, dental, 401k. It's an outstanding benefit. For employees, find out why millions and millions of people are continuing to join the platform of Bundle Select. For more information, go to bundleselect.com. That is bundleselect.com. If you're an employee listening to the program and you're interested in these benefits offered to you by hundreds of companies and now nearly 14 million employees, let your HR and benefits know. Or if you're an HR and benefits person listening to the podcast, go to bundleselect.com, get set up for a demo, and be good to go. All right, today we're going to talk about the question I threw out there, and it was a really interesting, I think, just because there's so many dynamics going on right now in real estate in general. The enthusiasm around real estate has been quite extensive over the last couple of years. But the question I'll throw out today, and the show topic is California real estate still a good investment? Again, is California real estate still a good investment? And I'm going to cover that with you today. I'm going to talk a little bit about that question. We're going to answer the question. We're going to address it. There's some things around it. There are some areas that I definitely think you have to be very, very careful in California real estate. And there's still some areas where I think you have a better chance to succeed. And so there's some things you really should know as we're collecting this data. So most of you, a little backdrop here, most of you know in that the last couple of years, there's been a huge run on real estate. And primarily, there's a couple different reasons behind that. One, the stock market has had a tremendous run up. So a lot of people are feeling good about assets. They're feeling good about, their net worth. So when people do that, they start spending money. And in many cases, a lot of people like the investment of real estate because it really what, in my estimation, what a lot of people have done over the last couple of years is they've taken some gains off the table, if you will, and some diversification off the table out of the stock market and other investments, and then reinvested that capital back into real estate. And most people would say, long-term, real estate is one of the best plays there is. And that's true. I think, the data and the research and the real facts prove that out. Real estate long-term has always been an outstanding investment. I always remind people that when they're asking me whether should I buy or sell or when's a good time, I would say that there's better times to buy real estate. But I will say this, if you buy real estate, I don't really know that and I believe this, no matter when you buy it, if you're looking at a 7 to 10 to 15 year time frame in terms of holding that real estate, I still think it's hard to get hurt. Now, there's no guarantees, and things happen. Where people get hurt is when they have to sell real estate when they don't want to, or when they have to sell real estate when the market's down for some reason, and then they take a loss, and that's how people get hurt. Long term, I'm still a big believer that I think it's always wise to buy real estate if the timing is right for you, if the location's right, if the deal's right, if everything works for you. I would say it's always a good time to buy real estate, invest in real estate, if you intend to do a long-term hold. If you're talking about a flip, I would be super careful. I would be very careful on flipping. Boy, you have to know what you're doing. I've even seen people that are really, really good at flipping get caught in trouble and get caught in a turning market, or all of a sudden the market turns upside down and you're holding several properties and then you're upside down and it gets problematic. So I would say if you're flipping homes or churning, then that's a different story. But if you're buying real estate to hold long term, I still think it's a great play. It's a great investment to have, and I would continue doing it. So let's talk a little bit about California real estate. Before we do that, just a reminder, I want to thank again those that continue to participate and listen to the show. We have well over 10,000 downloads and listeners per month. We intend to keep growing that. We're going to be doing some exciting things in the next 6 months to a year or so. To do that, we're going to continue to attract more guests as well. If there's any topics, I get a lot of feedback, people, different topics they want to hear. There's a lot of interest in investment real estate for sure. So we talk a lot about that. But if there's any topics or anyone you like to see as a guest related to the show, let me know. And that last thing I'll say too, just remember, we do a lot of giving back segments. So we help nonprofit organizations or organizations giving back. Anything that's good for the community, we like to support any way we can. Even though we're a real estate related show, we do a lot of community related things. So if you have someone that you want to get the word out or spread the word, you're trying to raise money for a great cause, check in. Give me an email, joe@reradiolive.com. That's joe@reradiolive.com. Or you could text the text line 408-838-9060. 408-838-9060. So California real estate, I would summarize it as this. That is, if you've held real estate for a long time, as most of you know, you're in pretty good shape. You've got really good gains. And so even if some setbacks or some pullback, you're going to still be pretty good. I would say if you're in the market to buy a home right now and you plan to live in the Bay Area and work in the Bay Area for the next 7 to 10 years, and I would say, as crazy as it sounds, it's still, if you find the house you like, I still think it's a good time to buy. Here is where the difference shifts. I'm not sure that there's any case, I'm sure you can make a case somewhere, but I would guard against buying investment real estate in California, almost anywhere in California now. I'm sure there are some places, maybe in the outlying areas in Fresno and maybe in the, I don't even know, on the Central Coast. Honestly, that's getting expensive too. Maybe in the Central Valley, there's still some deals somewhere. I don't know. That's hard to realize as well. I would say this: there would be a big caution, red flag caution for anyone that's looking to invest in California real estate. And what I mean by that is, if you want to invest, if you want a rental property, if you want a property where you can buy it and then rent it out, that's a tough one right now. I would stay away from any California real estate. I would definitely look at other states. I would look at Nevada, Arizona, Texas, North Carolina. There's some parts of Florida I still like, even though that's had a big run up there too. But the best thing you could do is talk to people that have purchased properties outside of California and some of the areas that they're recommending. Be careful on some of the articles that you read about the 10 best places to invest. Here's the problem with an article that you're reading today. That research, quite typically, the research that you're reading and the data that you're reading today, could be 4 to 6 to 12 months old. So they could have been working on this article for a long time, and all of a sudden they're publishing this article on September 29th, 2021. And really, they started collecting this data and information and writing this article 6 or 7 months ago. And so you have to be careful when you read those articles to run out and automatically think that the top 10 places to invest in real estate are still the top 10 places as per the article. So be very careful with that. I would be very careful with those types of things. Articles online or anybody trying to sell you information, to prove that they could give you the method or the magic pill, the magic bullet to buy and sell real estate. So in general, I would say be very cautious. I have a cautious flag over California. I wouldn't right now. I'm sure there's places, and if there is, let me know, email me, text me, whatever. But that I know of, I would be very skeptical. Maybe further up north in California, the Chico area, maybe up in there, maybe up further north, you can make a case for some investments. The challenging part about those areas are that the job markets aren't strong. And then you have to be really careful about how strong the rents are too, and run the numbers and find out if that makes sense or not. But in general, I would say no. Investing, if you're buying property to rent, so if you're buying investment property, or we refer to as non-owner occupied property or rental property, however you want to term it, is that no, I would stay away from any idea of purchasing real estate in California with the intent to rent it out. I would say no, don't do it right now. I would hold off. If you're in the market to buy a primary residence because you're going to live here, or you have a great job somewhere, or it makes sense, or you relocated, then yes, absolutely. I would still look at buying a house. I think the timing stuff is hard to do. It's like trying to time the stock market. A lot of people say, well, I've got it right. I timed the housing market. I sold all my properties when they're high and I bought them all when they're low. I know we heard the stories. I mean, I know some of that is true, but let me just share with you, most of it's BS. A lot of people bullshit about this stuff, and they try to sell articles and marketing material and, seminars and a lot of different schemes because they say they called the markets perfectly. That's a very difficult thing to do. And anybody that's honest and has been investing in real estate for a long time will tell you and share with you that where they've made their money is typically on the long-term holds. I know there's some people out there that make really good money on flipping. I get it, but that is a super, super risky proposition, very risky proposition. You could lose money so quickly it'd make your head spin. On the other hand, if you're looking at long-term investments, that's the best way to go. Isn't it interesting that the people that have the patience to invest in something they believe in now and reap the rewards 10, 15, 20 years from now are usually the ones that do well? And what I mean by that is, I know we hear stories about how someone bought 5 houses and turned them into Airbnb, and they're collecting $50,000 a month, and their feet are they're on the beach and they're drinking Mai Tais and they never have to work again. I know some of those stories are true. I'm sure some people are able to do that overnight. I do, but I could tell you for the most part, it's not that easy. There's a ton of trends out there on social media trying to get people to do all kinds of different things as it relates to real estate. So the good news is money's still cheap, and Fannie and Freddie, if you haven't heard, just removed the expensive fees they assessed on second home and rental properties earlier this year. They just removed them as of they're actually 15th of September, effective the 1st of October, which is the next couple of days. Here's some exciting news for those that are buying second homes and rental properties, is that now it's cheaper to do that with Fannie and Freddie because they removed those ridiculous fees, partly because they get so much heat, but really honestly, the reason they removed those fees is that volume has gone way down. Lending has slowed across the board. Don't get me wrong, it's still busy. There's a lot of opportunity out there. There's a lot of business we're doing with our mortgage team. We're doing a lot, but not even close to what it was in 2020. It's slowed quite a bit. Because of that, lenders are looking for different ways to increase units and increase the amount of loans that they close. And the way they're going to do that is they're going to have to change some programs. So that is the good news, that rental properties, and again, second homes, if you haven't heard, effective October 1st, no longer are carrying the expensive additional fee that Fannie and Freddie added to them earlier this year. It's now removed. So that's great news. That is certainly good news for those that are looking to buy second home and investment properties. So in general, I would say be very careful. about investing in California real estate if it's for rental properties or it's not for your own primary use. Here's the other thing I would caution you with. Be very careful on the second home markets. I think you guys, most of you may have heard how I feel about this, and I study this stuff every day and on an ongoing basis. I'm not saying that all this stuff's going to become true, but here's what I do feel strongly about. I feel strongly that the first markets, the types of markets, they're going to take a setback and get a pullback, and some of the appreciation will come back, maybe 10, 15, 20, 30%, depends. I do think the first markets that will experience that trouble are going to be second home and vacation markets. That's right, second home and vacation markets, places like Idaho, Montana, Arizona, some places Nevada, different places, mostly the kind of the famous places that people like to talk about, where they think their second homes are, they're gonna not have to go to the office anymore. So I'm gonna buy a second home in Montana or Wyoming, or I'm gonna go to the desert, or I'm gonna be doing some different things in these different locations. Second home purchases have gone up 85% year over year, 85%. And rental the same. So here's what I would caution you with a huge, huge red caution flag. Stay away right now, stay away for the next year or so from extremely expensive vacation rental markets that have run up in the last year or so. Here's why. I'll just give you an example. And this is a small example, but it's on an extreme level. So let's take a place like Montana or Wyoming and some of these places that are extremely desirable. People dream about the ranch and the cows and the mountains and the streams. And don't get me wrong, all that's beautiful and great. And so we've had this huge run up of second homes, people buying places. So if we go back about 2 years, the average price of a home, let's just take Montana, or let's take Idaho or any of those places. I'll give you an example. About $400,000 for the average cost of a home in a couple of these vacation type markets about 2 years ago, before the pandemic, okay? That same home, an average of $400,000, is now close to $700,000 average in those markets. That is a remarkable run up. Think about that. The same home that you would have been looking at 2 years ago, 2.5 years ago, for $400,000 is now worth $700,000 plus. So the people that bought are extremely excited 2 or 3 years ago, right? But the people that are buying right now, be really careful. Here's what will happen. I shouldn't say here's what will happen. Here's what I feel like will happen. Here's what I have a great sense of what will happen in these vacation second home markets. See, you have markets like this that do not have they don't have job growth. They don't have the jobs to support the skyrocketing prices that continue to go up. And I'll share the reason why in an example. Okay, again, take Montana or Idaho and a place like that that have these huge run-ups. When the market starts to soften and people start to realize they have to go back to their office and they can't put their feet up on that lake bed while they're fishing, they have to be back in the office, that these markets will start changing. Believe me when I tell you this, these markets will start to change. And the first markets that will be hit hard are the ones that had the extreme run-ups, okay, and that don't have the jobs to support that run-up. And I'll give you an example. I just talked about Idaho, Wyoming, places like that, right? 400,000, 2.5 years later, 700,000+. Okay. Now let's switch gears and look at the same situation in Silicon Valley. Some people might be saying, well, Joe, the same thing happened in Silicon Valley. Yes, that's correct. You can make an argument that it's even worse. First of all, 2 years ago, it wasn't 400,000. 2 years ago, it might've been 800,000 or 900,000 average, and now it's 1.3. So here is my point that I want to try to wrap this up in a nice little bow here. In Silicon Valley, let's just say again, the home 2 years ago that you were looking at was $1 million and now it's 1.4, 1.5. You might think that is nuts. It's crazy. Yes, that's true, but that's reality. Okay. The difference, let me be real clear about this. The difference in the example that I'm using and the comparison that I'm using is that in Silicon Valley, you have an extremely strong job market with people making more and more money, adding more and more jobs. Between Google, Facebook, Amazon, several others, we're talking about another 100,000 jobs created in Silicon Valley. That's right, in Silicon Valley over the next 4 to 5 years, over 100,000 minimum, just in Santa Clara and San Mateo counties. So when markets adjust, when it comes time when there's an adjustments in the markets and flattening and it will happen, believe me, nothing goes up forever without settling back. We've all seen this. So the difference is this. Yes, we may get some settling in the Silicon Valley and the housing market and some pullback and some flattening. Yes. But what buoys that up, what supports that potential appreciation long-term is the strong jobs. See, when we have a market disruption, when we have a real estate disruption in Montana or Idaho and some of these places in Arizona, Nevada, when all of a sudden markets correct and people start panicking and they're selling their homes and they're taking their money off the table, guess what? There are not jobs in those markets to support the sustainability of a market like that. Okay, so this is why I'm expressing my concern for those that are running out buying second homes and vacation homes and all these different places in these exotic markets. Be careful. Again, I'll say this. If you are buying a home right now, a second home in Montana or Idaho or parts of Washington or Oregon or someplace like that, that doesn't have the strong jobs, right? And your intent is to hold that property for the next 5, 10, 15, 20 years. And I'd say, don't worry about it. Seriously, don't sweat it, because even if you have some corrections, if you're committed to that and you love that area and it means that much to you and you're okay there and you're going to wait it out, then I wouldn't worry about it. But I'll tell you this, that I feel strongly that those markets will be the first ones that'll be hit, and they'll be hit fairly hard. And it'll be interesting to see how much those markets can sustain when the adjustments take place. So the combination of things that are coming, that could take place, that could adjust or could have an effect on housing markets, this. Everybody's concerned about inflation, right? Everybody is concerned about what that might do to interest rates. If interest rates go up, even though the Fed said they're going to keep the interest rates low for the next year or so, there's no guarantee of that. If we get hit with another pandemic, or if we get hit with, COVID-19 3.0, we've already got hit 1 and 2. If we get hit with 3.0, something we don't know that's coming, and forces people back into their primary residence or back to their jobs and different things that are taking place, anything could happen. And when it does, when people start panicking, they start taking money off the table and going to cash. Okay. And I know this may sound crazy, but just like when markets change, people go to the stock market and they actually take a lot of their money out of the market and put it on the sidelines in cash. I mean, I know a lot of you understand this, but a lot of people, when markets start shifting, they'll go to a lot more conservative investments, or they'll take money literally out of the market and park that cash on the sidelines, right? You've heard of that. That happens. Well, guess what? Sometimes when people have no choice, they'll do the same with real estate. I know some people, well, it's different. Well, not really. It's not. If you have 4 or 5 pieces of real estate and you have a fair amount of equity, or let's put it this way, you don't have that much equity, and all of a sudden you see a market turn, and that home you bought for $1 million is now worth $700,000 in the next 30 days, what do you think you're going to do? A lot of people will panic sell. Let me tell you, a lot of people will start to panic sell in markets like this. Very few people will hold on and have the nerve to take a long-term approach. Most people get nervous like the stock market and they pull the money out. And I'm telling you, this will happen in the real estate market. So you have the 85% of second home purchase over year, I just explained. All those people, those millions of people that bought second homes, I could guarantee you when something changes in the market or when people start to panic and they're seeing appreciation start dropping in a place that they paid $1 million and now it's worth 700 or 800 and it starts ticking down, guess what? People will panic sell. And the reason why they will panic sell is this. They don't want to see the worst case. They don't want to see the home they bought for $1 million go to 500. It's already gone to 800. They've lost 200 grand. They're going to take their chips off the table, sell that property, go to cash, and wait and ride this thing out and see what happens. I'm telling you, I've seen it before. People that have followed the podcast, I'm sure they've seen it before. Maybe some people listening to the first time, they have not. But I guarantee you, in markets that start to panic, I'll relate it to the stock market. What happens? When stock market starts to drop, panic hits the street, information on social media and the network news tells you people are pulling out, people are nervous. What happens? People start pulling money from the market. Ladies and gentlemen, it's the same thing with real estate. It's no different. It's no different for a lot of people. Listen, whether you have $1 million in real estate or $1 million in the stock market, and either one of those, if they start to become in some kind of jeopardy and you start to be in a situation where you could potentially lose money from that stock or from that real estate, a lot of people panic sell. I'm telling you, it happens still to this day. Now, some people would say, well, no, Joe, that's not true. People just hold on. No, they don't. No, they don't. A lot of people don't. So here's my point. When the panic selling starts, and I'm not saying it will, but at one point, I really believe it will. When the panic selling starts in these vacation second home markets, it'll create a panic and that'll just happen. People will follow. I hate to say it, but people will follow. Next thing you know, you have huge adjustments in markets. Now, it's a little more simplistic, or I should say that's a little more simplistic, but seriously, this is the types of things that are going to happen. So as we kind of close up the show here, I want to kind of wrap things back together. And the question of the show, the topic of the show was, is California real estate still a good investment in California real estate? Yes, only if it's a primary residence. I would say no. Be very careful if it's a second home or an investment property. I would say I would stay away from any purchase of second home and rental properties for the most part in the entire state of California. I would, with exceptions. Again, there are always going to be little pocket areas, right? You find a deal or something pops up, and I'm not saying it doesn't exist. I'm saying overall, I would stay away from buying any kind of investment properties in California in the short term in the next year or so. But I'll just remind everybody, if it's your primary residence, if you're establishing a location, you have a job, you could support it, you want to be somewhere, you're going to raise your children, whatever it may be in a certain place, then go for it. I think it's still long-term. It's one of the best investments you could ever make is in real estate. So, quick summary, I would be guarded against any kind of investment or second home in California real estate. Stay away from that. Secondly, if you're looking at investing in second home or investment property, go outside of the state of California. There's still a lot of great opportunities. Do your research. Typically, you want to go to areas that are close to colleges, close to up and coming big areas. A lot of people will say that, the minute a Walmart or a Best Buy and some of these places start going in or projected to go in, that's a good time to buy different real estate. So I would say there's a number of different factors and kind of, landmarks and different milestones and things you will use to make your decisions on where and when to buy real estate. But out of state, there's still a lot of great opportunities. I just mentioned some. There's still some in Nevada, Arizona, Texas, North and South Carolina. And there's also some good stuff in Florida still. Jacksonville, Florida is a good one, I think, right now to invest in, and a couple other places. So as always, if I could help you with any information, our team here, as you know, our team here helps with residential financing. We have a whole group of real estate agents that we work with, and financial planners and CPAs and real estate attorneys. We're here to help you. If you need information or guidance or consultation on any of those things, you need a refinance, you need a purchase loan, we could help you with that. You need a recommendation from a real estate agent, we could help you with that. A CPA, we could help you with that. Especially, I'm telling you, for anyone that is self-employed, 1099, corporation, self-employed, we have some incredible CPAs. We really do. Outstanding. Hard to really get creative with someone that's W-2, but if you're out there listening to this podcast and you are self-employed, 1099, corporation, small company, middle-sized company, looking for someone that really help you on the tax side, reach out to us. We have some outstanding CPAs and tax people that really, really help business people on a regular basis. All right, more information, you could always go to 𝗓𝗏Radiolive.com. That's the website. To reach me, Joe at 𝗓𝗏Radiolive.com. Or you could also reach me at 408-838-9060. Again, 408-838-9060. Thanks again for tuning in. Thank you again for all those people that continue to follow the podcast. And we look forward to having more and more guests coming up soon. Take care. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERL-1763.com. That's RERL-1763.com. Subscribe to our podcast. Discover more at RERL-1763.com.